for joining me. My name is Nikki Young. I'm a certified financial planner and advisor with Northwest Financial Advisors. Happy to present this presentation on 5 strategies for building and maintaining a retirement portfolio. Before we begin, just a quick compliance slide. Please note that the information contained in this presentation is for educational purposes only, not intended to be a substitute for specific individualized advice. For guidance specific to your unique situation, it is recommended to consult with an advisor. Now, the importance of building and managing a retirement portfolio. Our retirement portfolio represents our savings that we have built up that eventually is going to turn into the income that's going to support us through our retirement years. And now by building and managing a retirement portfolio effectively, it's going to give us more financial confidence that we're going to have enough money to do just that, support ourselves in retirement, not only in the first year of retirement, but every year after that. We can plan for things like healthcare costs, as well as leaving a legacy behind if that's something that's important to us. And effectively building and managing a retirement portfolio might eliminate some of the concerns or stress around those areas. Now let's get into the 5 strategies for building and managing a retirement portfolio. To start off, defining your retirement goals. Estimating how much you're going to need to retire. Conventional financial wisdom says that that number is 75 to 80% of your pre-retirement income. So for example, if you have $100,000 of pre-retirement income, maybe you're retiring in a state with higher cost of living, so you use the 80%, that means you would need $80,000 a year in income to feel like you are living, you have the ability to live the same lifestyle that you did when you actually had a paycheck coming in. Determining your desired retirement age. That's going to let you know how long it is that you have to save up before you need to use these funds, and will allow you to be more intentional about how you're saving, where you're saving. And then lastly, assessing your current situation. It's from a budgeting perspective, how much realistically can we save and still be able to live, our day-to-day expenses, take care of our day-to-day expenses and bills with our current income, while still being able to set some aside for our retirement portfolio. Number 2, diversifying your investments. You may have heard a lot about why it's important to diversify from an investment standpoint. You have investments like stocks, bonds, real estate, and cash. And by having an appropriate mix of all of those, you're going to be able to manage volatility that is normal when you're investing in your retirement accounts, but as well as being positioned to keep pace or even stay ahead of inflation, which we know is the rising cost of our goods and services over time. Now, not only diversification from an investment standpoint, but diversification from an account standpoint. In particular, you might be saving within your 401k at your current job. You may have traditional 401k, but you might also have Roth 401k. And what that will allow you to do is have a mix of tax diversification when you're in retirement. Some of your income in retirement might be taxable, but if you are saving into a Roth, some of that income in retirement might be free of tax. So not only diversification from an investment standpoint, but diversification from where you're saving will give you a better balance of managing your total lifetime taxes in retirement as well. So diversification is key of staying prime positioned in order to have a successful income stream from your retirement portfolio. Number 3, regularly reviewing and rebalancing your portfolio. So what that involves is taking a look at your investments periodically on whatever frequency makes sense to you, and making changes if necessary. Sometimes no changes are needed, but adapting to market conditions which change over time. Our economy cycles. So how you're invested should be complementary to where we are in our economic cycle. And that'll help you avoid the mistake of not having a portfolio that makes sense for not only where you are in your life, but also the amount of growth that you need to get in order to get the income need that you ultimately will seek in retirement. So when to rebalance. If you're working with an advisor, you may have scheduled reviews and review your investment portfolio at that time. Or if you have significant life events, if you started investing when you're 25 and now you're 35 with families, new jobs, anything that is impacting your life from a financial perspective, it's always a great time to review your portfolio. And then how to rebalance. Of course, we've all heard the mantra, we want to buy low and sell high, but rebalancing gives you an opportunity to take advantage of the overperforming assets and leveraging that in order to buy in on some investments at a lower price point that may be an opportunity to maximize our returns, especially over the long term. Number 4, planning for withdrawals and longevity. So once we get to that point where we're ready to access or tap into our retirement portfolio, how much can we take without draining it at a pace that is not sustainable? Again, conventional financial wisdom says the 4% rule. What that means is that you're able to take 4% from your portfolio over a 30-year retirement, and it'll last the entire time. So for example, if you have $1 million portfolio, 4% of that would be $40,000 a year. And another factor in withdrawals and longevity is assessing where your guaranteed income sources are going to come from if you have them. So that's going to include your Social Security, if you have any pension income, or even annuity income. Annuities are designed to provide you an income that's going to last the rest of your life. And so once you take account to what those guaranteed income sources that you have coming in are, you'll know how much above that you'll need to pull from your retirement portfolio. And then in retirement, we want to ensure that we are not draining the well without replenishing it in some sort of way, and having an investment mix that allows you to do that, that's appropriate for your retirement, your risk tolerance, and your timeline. Number 5, implementing a solid financial plan. Financial planning is going to take a look at all of the pieces that make up your financial life and be the foundation of answering questions that can cause a little bit of concern, anxiety, or uncertainty, like when and how to claim Social Security, what the retirement withdrawal strategy is best, what bucket to pull from first. Can we factor in healthcare costs in this plan, as well as making sure our investments are efficient and legacy planning? And having a financial plan will allow you to answer the question that is one of the top concerns of pre-retirees and retirees that I have the opportunity to speak with, which is, will your money outlive you, or will you outlive your money? In closing, I want to share the Northwest Financial Circle of Life and talk about, as a certified financial planner, really want to have a conversation and address all of the areas that make up the things that we have to make decisions about in retirement, that make up your financial life: cash flow, tax efficiency, estate planning, and really being a guide to help make informed financial decisions and try to avoid anything that's going to get us in trouble and derail where we're trying to be, and ultimately put a plan in place so that we can have confidence as we move and transition into that retirement phase. So that is going to conclude the presentation. I want to thank you again for taking the time out to join me on this. After the presentation, you will receive a survey. Any feedback that you can give on the presentation is appreciated, and also indicate if you would like to have an initial consultation about your retirement outlook, which is really just a conversation about the things that are important to you, anything of concern that is important and a priority to address as we're planning for our retirement future. So again, thank you again for joining me. Have a great rest of your day.